Hi, this is the chart rundown for Sunday, the 12th of April, weekend edition, starting off with the FTSE 100, where you can see that we've got a rising trend channel there. For the channel there at 10,250, I suppose it's a bit of a arbitrary line in the sand, but we did have obviously the breakdown and then the break back into the channel, and that seems to have had or have legs at the moment. We've got the 15,200 day lines rising, the 50-day line there at 10,388, and above that, looking for an end of day close through resistance on the way down, 10,650, to take us back to the highs. That seems rather unlikely after the failure of peace talks over the weekend, but FTSE has actually been, well, it's already up 10% off the lows and seems to be, I'll say, shrugging off the Iran situation, but maybe getting it in stride. But would not be obviously surprised if we were down towards that 50-day line early in the week. Moving on to the DAX, and here, picture that of markets being blocked by the 15,200 day lines there, 24,100. Need an end of day close above that to give us an upside up towards the second gap down that we had, 24,500, maybe over the next week. But obviously, given the Iran situation, can't rule out a filling of the gap there down to 23,400 before any potential move to the upside. RSI at 54, which is actually in a good place. We are half full rather than half empty now, above that RSI 50 level. Moving on to the Dow, and here you can see that we got up to the top of that falling trend channel, which is what we wanted to do. Obviously, wanted to go a bit higher than that as well, but 48,300, the top of the channel there. An end of day close through that, and we're back to the 50,000s. But given the events of the weekend, that seems less likely than perhaps a test of the 200-day line there at 46,800. Hoping, though, that will be the lowest we'll see on any pullback, given that that was the old resistance, and hopefully that would then become new support. Cryptos are next, and they've obviously been sidelined by real-world issues, and current situation is we're in a bit of a conundrum as to whether we've got this market, at least Bitcoin, failing at the top of the channel or trying to get through it. At the moment, we have failed the level in question around 73,000. Below that, we've got the risk of a test of the 50-day moving average at 69,100. But hoping that we won't get anything lower than that, given the way that the RSI is in the mid-50s, is at 55. And perhaps that's enough to get us going. But obviously, after multiple failures in the mid-70s, and given the way that this February to April pattern is very similar to the November to January pattern, we have to be wary of a potential break of the uptrend line there from February at 66,000, and then a new leg down, which obviously would be a bit of a horror story, given that we're already well off the best levels of last year. On to Ethereum, and the picture is quite similar to that of Bitcoin. The difference, though, is the way that we've shied away from the top of the falling trend channel so far, so we haven't even done as well as Bitcoin 2415. Below that, we've got the risk of a break of that uptrend line 1975 from February, and obviously that could be forecast by a break of RSI 50. So far, we're still above that at 56, so that is okay, but maybe a few days away from a potential breakdown if we lose that 50-day moving average at 2068. Still need to get through that mid 2000s level to, I suppose, the best case scenario then would be up to 2785, which is basically the resistance, rather the support on the way down that we had before the breakdown at the end of January. Moving on to gold, and read something on LinkedIn, which is obviously a great source of wonderful research and insight and lovely people, that the last three times that gold was down 25% or over, the stock market rocketed. So in 73, in 2008, and other times as well. In fact, the rise for the stock market after that was actually quite explosive. 1978, in fact, gold also fell 25% after in the wake of the Iranian Revolution, rather surprisingly, and basically the rallies after that over well over three figures in all those occasions. So let's see. We've got the same thing with gold this time. We've got the top of the falling trend channel there at 4,900, near the 50-day moving average 4,903. Obviously, gold has already bounced, but let's see if that historic rule of 25% more down and more down would actually get the stock market up. What is interesting there is that presumably after the fall in gold, you tend to get money printing, etc., etc. Let's see if that happens. On to the market of the moment, which remains the situation of crude oil. Here, obviously, this was before the end of the peace talks. We were suggesting that if we fall below 95 to, let's say, 105, 110, then the new range would be 85 to 95. The current situation is that we're around on the weekend betting websites. We're around 95, so hopefully this market's still holding the floor of the channel there. Did actually push down to 90 just near the close there, but at the moment 95 to maybe 105 still on the cards for this market, especially while the RSI remains above the neutral 50 level. Moving on to the stocks, and I have been a long-suffering shareholder in Audioboom, still waiting for Apple to take it over, which was perhaps the reason for the original purchase back in 2022, something like that. Obviously, every time I say anything negative about the company, the holders say that I'm wrong. Obviously, I'd like to be wrong. Current situation, though, is we had a great day on Friday, which I think I've already covered the stock in the run up to that. We broke that out of that wedge on Wednesday around the 480 mark and have rocketed since. Perhaps there will be a sale. Perhaps somebody else other than Apple will take a look at this company. What is interesting here, I suppose, is that whether you're a bull or a bear, the shares have basically traded in line with their revenues, etc., without any takeover froth or anything else. So I suppose that would be either side of £6 over the last year or so, which is almost like a fair value place. But you can see that going into Friday's rally, we've had a solid line of support in the RSI window, even though we've had lower lows for the share price, so that's bullish divergence. We've also had the 200-day line rising, and in fact, if you look closely, very closely perhaps, you can see that 50-day line is starting to rise as well. That would mean that we're going to a golden cross. But the initial target here, £6.50, and obviously then we've got the big barrier there at £8. It is a stock also that you get the feeling there is still weak hands, or there's still bedwetters in there waiting, or trying to get out after being caught high and dry there. But if you're a fan of the shares, looking for the greatest glory here at the moment, with or without any M&A, would be up towards the £9 level, the top of that triangle there from back in October. Moving on to Avacta, which obviously everyone and the mother likes to know or wants to know where this is going. What's interesting here is that we've got an uptrend line in the RSI window. Had a good update from the company during the week, but the interesting part, I suppose, is actually the way that we gapped down at the end of last month, gapped up this month. It's a bear trap island reversal, so it does actually suggest that some people have been caught short of the shares, which are always accused of being a long way away from getting over the line. But at least in the moment, while we're above the latest gap there around the 66 pence level, we are looking for 90 pence, perhaps as soon as the end of next month. If you're cautious, obviously you're waiting for the big 75 pence resistance to be broken. But that setup there looking pretty good with the 50 and 200-day lines both rising in parallel. On to a stock which has been, I suppose, a bit of a disappointment for the longest time, actually, especially 24, 25, but come to life with a European green transition, and probably a good time to do so, given the lay of the land in terms of Iran, etc., etc. We've soared through recent broken resistance at 8 pence. First target here was 11. I've upgraded that to 16 pence by the end of next month, while we remain above resistance on the way down at 9 pence. So hopefully we can do that. But that uptrend line in the RSI window, a helpful feature. Don't think I've ever covered the next stock, Frontier IP, but we had a nice push higher on Friday. What you can see here is that the RSI has an uptrend line window. We've basically broken out of a falling wedge situation and broken through the 50-day moving average of 12 pence. We even managed to get up to the 200-day line, but above that 200-day line at 16.8 pence, looking at the top of that broadening triangle, 28 pence by the end of next month as a best case scenario target. Ideally, we stay above recent broken resistance around that 13.5 pence level. Whatever happens. Moving along to the situation at Gem Resources, and here potentially a turnaround situation. It's a bit of a punchy call to say it's a turnaround situation, but we do still have the 200-day line rising. We have managed to get back above the old September support there at around 0.27. Above that, we're assuming a bear trap and a broadening triangle base, and at least the 0.45 level over the next month or so. Obviously, the best case here is 0.8 pence, but not sure quite what would do that to make the shares that strong. But looking at the current setup, waiting for the 50-day line and that resistance line there from October to be broken at 0.3 properly. Moving on to Greatland Gold, which is another of those stocks that I suppose everybody looks at and enjoys looking at. Here, amazing turnaround. In fact, given that the gold price obviously has turned, but this has turned even more. Bear trap island reversal and gaps higher as well. So that shows that the shares are running at 90 miles an hour in a 70 mile an hour zone. Above the latest gap there at £7.38, and we are looking at the top of the rising trend channel there as high as £8.50 by the end of next month, or even actually the way things are going by the end of this month. Trying to get that top line exactly where it should be, but £8.50 looks as though the place it should be heading towards. Onto IQE, where it's just interesting. This just kept on going. We've had various targets over the recent past. The first one was 11, then 15, and then finally thinking that 35 pence would be the top target there, but we've managed to break through all of them. We've got a final target there, which I don't know how that would be achieved, but a resistance line projection for 2023 up to 50 pence. There may be those who are more familiar with the shares or the company's story than I am. Could see why the shares could get there. The other point to note is that we've had basically the RSI above neutral 50 since first week of January continuously, which is absolutely amazing. All those multiple RSI 50 plus rebounds for the stock. Moving along to Mercantile Ports, which I did cover at the end of the week, but it looks as though the shares were even more optimistic than I was. I was looking for 1.2 pence. We obviously blew the doors off on that. The next level up here can actually be as high as the top of that broadening triangle there at 2.4 pence as a best case scenario target by the end of this month. Again, maybe the technicals there leading the reality, but one can imagine that the current situation is an interesting one for the company, especially given the legal dispute news that we've recently had. Moving on to a stock which has been perhaps not the most bullish of situations during its lifetime of, I think, 7, 8 years, or 9 years maybe. Here you can see that we've got United Oil and Gas, and presume it's rising on Jamaican prospects, but we've managed to gap through the old resistance there at 0.22. Above that, looking for 0.32, and we remember at the back of our mind the way that the board there did award themselves all sorts of wonderful options, etc., incentives, multiples of the share price some months back. Obviously, those familiar with the company will remember exactly when that was. But basically, at the moment, the shares are looking great over and above also the state of or the position of the oil price. So we're looking for upside there, 0.22 support, 0.32 the target by the end of next month. On to Wildcat Petroleum, where the situation is that we managed to maybe surprise the market with it finally turning around. Shares coming from a very oversold level, 3 out of 100, which is basically the same as it was the last time they were very oversold. Breaking a line of resistance there from October at around 0.038. Above that, looking for a minimum at the 200-day line there, 0.068. Obviously, the company going to Aquis and also getting into the gold processing business as well, and seems to be quite excited about it. Finishing off with Zenith Energy, where after a decent week, we have sort of a slight pullback there, but we managed to stay above the floor of that gap there from July, around 9 pence above that looking for initially 11 and then best case as high as 15 pence by the end of next month. That's it for me today. More updates tomorrow.